in order to get rich in 1 year, you're going to have to put in years of hustle, learning, hard work, trying, failures. And then all of a sudden, 1 year, you're going to be like, holy moly, I made 5 times more than I did 5 years ago, or I made 10 times more than I did 5 years ago. Because what happens is when you go through all these like lessons and failures and whatever, the education that you go through, your income is like this. It's kind of just like a line. Mm-hmm. And then as you start to grow, it's like this, and then it just starts to shoot up.
Exponential, yeah.
Because now you have the right education.
Right.
Right? And the education compounds. It compounds along with your efforts and your skills, and everything is just, it builds on top of one another. So, what does it take to get rich in 1 year?
Hard work.
Hard work. You had to put it, you had to have the right mindset, and it takes those years of doing it. Now, when we talk about just on the financial side, hey, I mean, you can play the lottery tomorrow and win $10 million. Mm-hmm. Luck. You can, maybe hit the right stock, hit the right cryptocurrency. Maybe luck, maybe it's some experience or education. But again, that education is going to take time.
Right.
Long-term investing is the key to sustainable wealth. That is the most predictable way for you to become wealthy. The most predictable way for someone to become wealthy in their lifetime. And we'll even put a dollar figure on it. The most predictable way for anybody to become a millionaire is through long-term investing. Doesn't matter if we're talking about stocks, real estate. I know people love arguing, oh, real estate's better, or oh, stocks are better. Doesn't matter.
Yeah. But when you tell people, especially in this day and age, that, yes, I'm investing, I'm going to become a millionaire, and they say, well, how are you doing it? And I say, well, I'm investing in an ETF for long-term wealth, right? They'll laugh at you. They'll say that you're becoming a millionaire in 40 years when you could be using your money now. What do you say to them?
Yeah, and not just that. People are going to say, oh, 7% return a year, put your money in XYZ, I'm going to get 40% this month.
Right.
And first off, people are going to laugh at you no matter what you do. Again, it goes back to the mindset. If you're not willing to do whatever it takes, if you're not willing to get ridiculed, if you're not willing to be called crazy, if you're not willing to be called stupid, it's going to be very hard. Mm-hmm. So that's a fact. And that's another issue that people are going to have to go through, is because when you go through life and you're making money and you're showing it off, you got nice clothes, you're going on nice vacations, and then all of a sudden you stop doing that because now you want to use your extra cash, you want to save this cash, you want to invest it in yourself. It is going to look weird to your family and your friends. They're going to wonder, what the heck happened to my son? Is something wrong? No. I'm trying to build my wealth. I am not broke. I'm actually richer now than before, even though I look poorer.
Right.
So, yeah, you got to be willing to do that. The second thing is, what was the second thing?
If some people are laughing at you for making that much money.
Yeah, because they're saying you can get a better return doing X, Y, Z.
Exactly. Everybody's got their own opinion on what's going on, and there's always a bigger way to make money. What do you say to them?
Well, it is what it is. And anything with that much potential return is going to come with its own fair share of risk. Risk is better when you're young, but risk also needs to be managed. If you want to focus on building wealth, then you need to continue to invest in the things that consistently have been proven to build wealth. Now, that doesn't mean you can't do riskier investments, especially if you're younger.
Right.
You need to have some money. You should put some money towards your risky investments, right? Like I invest in startups. It's riskier. You just got to know what is your risk tolerance. If you are really trying to go all in and you want to be risky, hey, just understand the risk. There is a potential for huge returns. There's also a huge risk that comes with that. And that's something you have to factor in for yourself. Some people are going to want to take all the risk, and they're going to say, hey, I'm 25 years old. I got $10,000 to my name. I want to go and I want to do everything I can to grow this money as fast as possible. And I did some research, and I want to go YOLO my money. That's fine. It's a free country. You're free to do that. It comes with its own fair share of risk. There's a chance you could turn the 10 grand to 100. There's also a chance you could turn the 10 grand into nothing. It's just you got to understand that risk.
So when you say investing and we're talking about being risky, one of the safest investments that people think is out there is investing in a 401k. And I want to get into 401k investing because it is super long term. But a lot of people don't understand that when you hit the end of that 401k, you might not get as much money as you think. So what are your thoughts on kind of like investing in that way versus investing in the stock market or real estate and getting those type of returns?
Well, the 401k is a stock market investment.
Mm-hmm.
The difference is you don't have control of your money. So the 401k is a tax-deferred retirement account where you are investing your money into this account. Hopefully your employer is matching some of your money. If not, then you really need to rethink what you're doing with the 401k. But
a lot of rethinking.
Well, yeah. Let's assume that your employer is giving you some money. Now you're putting your money in your 401k. What happens is for a lot of people, you have a limited number of options of things that you can invest in. And so your employer is going to say you have X, Y, Z. You can invest in these three things. The majority of people have no idea what they're investing in.
Right.
They say, okay, this looks conservative or this looks like a good growth rate. Let me invest in here. What they don't understand is first, when you invest your money in a 401k, you have to pay fees. Because when you have somebody managing your money, there's a cost to doing that. And so the majority of people have no idea what their fees are when they're investing in their 401k, which is the first issue. And these are fees that you don't have to necessarily pay, or you can pay a whole lot less of if you just know what you're investing in. So if you have a 401k, please take a minute or spend 15 minutes just reviewing what your 401k is investing in. Look at what your expense ratio is. See what it's costing you. If your expense ratio is more than 1%, you really need to start doing some research. Even if it's more than 0.5%, you really need to do some research. But look at your 401k. Then you got to understand taxes, because there is a difference between two different types of 401ks. You have the Roth 401k and you have the traditional 401k. You have to pay taxes regardless. The IRS is not going to let you not pay taxes, especially when you're putting your money into a government-sponsored account, which is the 401k. So either you're going to pay taxes when you put your money in, or you're going to pay taxes when you pull your money out. A lot of people say, well, I don't want to pay taxes now, so I'm going to put my money in. Fine. But you just got to understand now a little bit of economics, because you need to ask yourself, do you think tax rates are going to go up or down? I think tax rates are going to go up, not only because President Joe Biden has said that he wants to raise taxes, but because just looking at the national debt, if the United States doesn't know how to control their spending, if the United States keeps spending more money than they're earning through taxes, I don't even know if we should call it earning, but let's just say that they're earning this money, then they're going to have to spend more of their tax dollars towards paying off their debt payments. And if they have to pay more tax dollars to do that and they want to continue spending, they're going to need this money to come from somewhere. And so they're going to need more tax dollars. So there is a chance, now I can't guarantee this, but there's a good chance that taxes are going to go up in the future. And this is where everyone says, well, when I'm older, my income's going to be a whole lot less. So my tax rate's going to be lower. Mm-hmm. And I say, then this advice is not for you, because my goal is to increase my income every single year. By the time I'm 65, I'm hoping that I have a whole lot of income,
right?
Not a little bit of income. And so, you know, if you're of that mindset where you're trying to grow your income, you're trying to grow your assets, you're trying to make more money every single year, then you're not going to be thinking that, hey, I'm going to have a very low income when I'm 65, so my tax rates are going to be lower,
right?
So, you know, if you're trying to make more money every year, you're going to have higher tax rates, you're going to be making more money, and these are things that you have to really think about with your 401k.
Right. And that's the difference, I think, between your mindset and the minority mindset versus what a lot of people's mindset is. A lot of people are working so that they can stop working one day. So that way they actually can build money, and then they don't have to make any more money.
Why the heck would you work a job for 45 years that you hate just so you can one day ultimately quit? It makes no sense.